Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the gold market. So in general, the drive factors for gold market is rather transparent in the last 2 weeks. So we have actually two major factors. On the technical side, we have strong resistance on the monthly chart, good downside momentum on the weekly. So we have here a really significant drop which engulfs previous 3-4 weeks of the sideways action. On the fundamental side, we have the United States-China negotiation on the tariffs, and investors widely expected right now the positive solution of this stuff, and that really pressed right now on the market. Also, some positive statistics have been released on the United States, and in general, this is also making impact on the market. So yesterday, actually, in the weekly report on the Forex market, we have talked about it. So at the same time, after the initial drop, market was showing this upward reaction, because that actually not just the 618 support, as you know, but this is also 1447, 1448 is a confidence support. And here market was oversold as on the daily, as on the weekly chart. So that's why we have suggested that on this week, market should show some reaction. And that really has happened. So our minimal target has been achieved. So market has reached 1474 confidence resistance on the intraday charts. And actually, this is the 30% retracement of this downward action, which is actually minimal target for the bottom line. So here we could say that, at least hypothetically, this butterfly is completed. This market has shown minor reaction here. But at the same time, we know that this level is rather strong. And since we don't have yet the final decision on negotiations, this is just expectations, rumors, but we don't know what really will happen. And technical support, the strength of the support, doesn't exclude the chance that market could proceed slightly higher, because strong support, strong reversal area, as on the daily, as on the weekly, suggests that retracement on a daily chart could be a bit stronger. That is the task that we will have to resolve on this week. So we keep our bullish scenario by far, but at the same time, we will keep the close eye on any bearish sign that could appear, and that could really become the hazard for the bullish scenario. That's what really we will have to do on this week. So on the 4-hour time frame chart, take a look what we have. On this ABCD pattern, although this is BC leg is really very shy, but anyway, that's the only ABCD that we have on this upward action. Market hits the agreement resistance in the confidence area, because that was the pips to pips, the COP touching of this upward action, which also created an agreement with the confidence resistance. That actually was our minimal target. Market shows healthier reaction here. On Friday morning, we haven't had yet this situation that we have right now. That's why we suggested deeper downward action. Besides, deeper downward action is followed by overall price action, because here we have strong bearish momentum, which still stands in the market. That's the first upward reversal swing. And in most cases, I'd suggest deeper retracement. That's the first moment. Second moment, if you will combine this drop, this first retracement, we will have a kind of the price action that keeps the features of the bread and butter. This is not, of course, the pure bread and butter trade by the Jordan-Apple framework, because it demands some conditions. But let's call it, it's not a bread and butter, but momentum trade, because we have strong bearish momentum, first upward action. This bearish momentum still exists on the market, and it will press on the gold, which suggests, again, deeper retracement. That's what was the scenario that we discussed on Friday. But take a look what we've got on Friday. On Friday, we've got the multiple bullish grabbers, and it has been forming here. And these grabbers suggest upward action and taking out of this stop. We do not know what will be this upward action. Either market will proceed higher right to the OP and next target, or it will be just minor spike up, washing rings of this top, and then collapse down. This is also possible, but grabbers gives the scenario opportunity to proceed higher immediately, right at this point. That's the new input that we have on the market by the Friday session. So this target actually 1490 approximately is the level that we're watching for, because this is 30% resistance area, and we suggest that it should be sufficient reaction on the weekly oversold area. So after that, market really has chance to continue downward action. So alternatively, if grabbers will not work and market will open with the breakout of these lows, we also will keep an eye on this scenario that we discussed on Friday. That's potential classical reaction on the first upward action. It's ABCD retracement, and take a look at creates an agreement with the major 618 support 1456. At the same time, this level is vital for a bullish scenario. Market should not break it down to keep chances on reaching 1490 next destination point. So actually, if this indeed will happen, the market will hold above 1456. Next target that we will keep an eye on will be this larger ABCD pattern, which, take a look, leads us precisely at 1485 area. So very close to the confluence on the daily chart. That's the scenario that we will keep an eye on. That's why this level is actually crucial level for a bullish scenario, and market should not break it down. So how we could trade the situation? Conservative approach suggests waiting for a deep retracement and waiting for his agreement around 1456. That will be safer to take a position here, because it will be better level, it will be stronger, and at least minor technical bounce probably will happen here. That will lead us to move stops to the break-even. At the same time, you could not ignore the grabbers. So you, for example, could split your position, take the 35% of the position right here, and wait and see what will happen. If market will start upward action right from here, you will be in the market, and that's what would be great. If still downward action will happen, well, take the rest of your position at the 1456, but the stop of the both positions should be below this level, preferably somewhere around 1450, 1451 area. So that's the scenario that we'll keep an eye on the market in the next week and see what will happen. At the same time, we should be very careful to price performance around 1456, because the breakout, as I said, of this level will be vital for a bullish scenario. That could mean that the major downward retracement that stands on the weekly, on the monthly chart continues. I would suggest that this breakout could happen if we will get something really bullish for United States dollar. For example, some, I don't know, real progress in negotiations. Demand for the gold will drop. For normalization of the relationship between the United States and China, some real breakthrough some will happen on these negotiations, or some really positive statistics will be released. We will get next week the PMI data, we will get the Fed minutes, so that's really could make impact in the market. But as it stands right now, well, chances on upward continuation still exist, and we should lead this work, lead this setup to the end.